Alright everyone, Cowboy Trades here, back with another update on KDA. So you've been asking for it, I've seen all the comments, let's now talk about the next move for KDA. So I want to start off on something a little bit fundamental to help explain this first chart that we're looking at. This is something that we talked about extensively in my last Bitcoin video, that obviously being that we're currently in earnings season, and there's something quite interesting to talk about from this. So we have had a fairly sizable divergence from the normal stock market indices. This is all going to tie back to KDA in just one second, but what I do want to highlight, as I've said many times, we obviously know, your Bitcoins, your altcoins, your KDAs, whatever you're looking at, they're typically going to follow the more volatile tech stock indices like the NDQ over here, which I've got in orange. Yes, we do also follow the SPX, S&P 500 as a whole, but we're more highly correlated to the NASDAQ. So, you might be wondering when you're looking at this chart, I've overlaid for the different colors so you can see what's going on here. In pink, right at the bottom, really underperforming everything else. You've got obviously KDA. The second worst underperformer, you might be thinking it was Bitcoin, but no, it's the NASDAQ, a stock market indice. We'll talk more about that in a second. Just above that, you can see Bitcoin is just holding in. And then right at the top, the SPX is holding in really well. So why is the SPX holding in well? And obviously, why is this bad for, Bitcoin and Kadena? Because we obviously follow the NASDAQ. Well, let me show you. If we look at how the SPX is doing, you can see we've barely retraced to the 382. If we look at how the NASDAQ's doing, we've retraced already down to the 0.5, and if we zoom in, we actually have lost this slightly. So why has this happened? Well, if you're looking at the Dow Jones, if you're looking at the SPX, obviously earnings season is across the board for these stock market indices, but it wasn't too bad for, your typical stocks in the S&P 500. But when you move on to a lot of these tech stocks, for example, I'm not going to dive into a bunch of these because I know a bunch of people are just going to switch off if I start talking too much about tech stocks. But Facebook or Meta platforms down 25% after earnings the other day. Earnings season hasn't been looking too hot for these stock market indices. So right now, Kadena, the NASDAQ, these are pretty much following right in hand. You can see these are the most highly correlated right now. And as you can see over here, Bitcoin and the SPX are basically hanging in there. So what's happening next for KDA? As we can all see, we're massively sloping to the downside. Let's talk about where we're going to be magnetized to. Well, surprise, if you're a veteran of the channel, if you've been watching my KDA videos, I've really had the same price target for like 6 months now. If you've been looking at my videos, 4 months ago, I've been telling you the trend is your friend. 5-6 months ago, I've been telling you, when we're at 650, that the time is not looking good if you want to rush in to buy. I remember when I started making videos on KDA at 650 and I said it was coming down to $1. People were laughing at me. I've still got these comments where people laughed at me around about 650. We're now all the way down here at $1.26. So originally from 650, I think we were calling for like an 85 down to this $1 mark, exactly $1 down here. We were basically calling for an 85% drop, which kind of sounded a little bit catastrophic maybe a couple of months ago. But right now, we're trading down 81%. And if we look at the rest of the move, we really don't have too far to go down until this $1 range. Now, there are some other price targets that I do want to talk about. How far are we away from $1? At this moment in time, we're not even a 20% drop away. We're literally 18.5% away. If we look over on the left side of the screen, you'll notice your fixed volume profiles. Now, we had a massive volume cluster right around this 145 level. This is where a large amount of volume was traded. I'll show you how this looks in the lower time frames in just 1 second. But the next cluster, as we've lost this cluster, as you know how the VPVRs and fixed volume profiles work, we normally come up or we trade at one of these, big volume areas, we accumulate volume, and then when we push to the downside, considering, as you can see here, there is no volume traded around these regions. We had a 1 week straight run up from 84 cent all the way up to 154, and we never revised this price action before. So we have 1 week here, 1 week here, so 2, 3, 4, 5, 6, 7 weeks worth of data traded around here. So as you can imagine, there's probably not going to be too many bid orders, there's not going to be too many asks around these levels. All of the liquidity, and like I've been saying, smart money is going to be looking at this where the most amount of volume has previously been traded. What I see as the next cluster coming in is, once again, around about that $1.08 region. But more specifically, we've got a lot more volume down here at 70 cent. Now, actually, the point of control is, all the way down here at 20 22, 23 cent. I'm not predicting this before you throw rocks through my window. However, I have been saying that I think everyone should hold their horses. I currently, like I've said for the past 6 months or so, I've been saying that we're coming down to $1. I always get questions on Twitter, Discord, YouTube. Cowboy, are you putting in buy orders at $1? Are you putting in buy orders at 90 cent? Are you putting in buy orders at 80 cent? I've yet to decide. Well, you know, I've decided that I don't want to put buy orders in at these levels at this moment in time, because when we're looking at, you know, the SPX really hasn't come down to the lows that I'm expecting it to come down to in the macro time frame. If we come over to something like Bitcoin, I mean, we haven't even taken out the lows from June, so you could imagine how something like KDA is going to perform when Bitcoin comes down and wipes out these lows at 17,500. Now, I'm not going to dive into a bunch of Bitcoin analysis, but on my channel I've been saying 14,000 to 16,000, or 16,000 to 14,000, whatever way you want to look at it. This is where I've been saying I personally think we come down to, and once again, look at this chart. You know, it is undeniable. You know, putting your opinions to the side, let's remove everything. Let's get rid of the Nasdaq. Let's get rid of the SPX. As you can see, lows beautifully lined up on this. Bitcoin is holding its lows. KDA is not holding its lows. It's really as simple as that. So we know Bitcoin is outperforming KDA. And let's go for a more conservative approach with this. Now, if we do go back over to BTC, once again, I could be saying we could go down to 14,000. That would be a 30% drop. But in my opinion, we've at least got another 20% to go down. That is 16,000. I think that is very conservative considering the market conditions. So if Bitcoin comes down 20%, I mean, look at this. How far do you think KDA is going to go down to the downside, considering Bitcoin's about 10, 15% above its lows that it put in, was it around these June lows, May lows? KDA, on the other hand, is trading, you know, about 10% beneath these lows. So I do see from this level that we're trading at right now, for KDA probably to move down about 30%. Now, when we do pull this down, there is a target down here, 32% drop down to 84 cent. Now, once again, where is this level? This is going to be a bunch of volume on the volume profiles. This is also going to be a bunch of touch points like here, touch points here. This was support, this was support, this was support, this was support, this flipped resistance over here. You can see resistance, 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 and then support, and it boomed up. So this is definitely a level that I've got my eyes on. I do also believe there may be a Fibonacci very, very close to that target. So let's look at what other targets that we've got so we can look at everything in the short term. Now, also, if we're looking at your VPVRs on the right side of the trading volume, this is what I wanted to show you in terms of this chart in the lower time frame. So as you can see over here, the fixed volume profiles are saying, you know, round about that 145, if we're incorporating all this data, was where we were holding support. Over on here, this is the lower time frame, so it's a little bit more accurate. So you can see that this personally says between 140, 145 is where, you know, all of this volume was accumulated, and now we're obviously kind of falling into no man's territory. And once again, higher time frames, you can really see as we're dropping down, there is no volume. There's no, well, I say there's no volume, there's no data traded. That's what I mean. There is volume around some of these regions, a little bit lower, once again around about that 88 cent region, but bar that, you know, there's no volume down until about 88 cents. So I think a lot of people are hoping that we bottom around about $1. I personally think I'm going to have to move my KDA prediction down. Now, let's go through all of these first so I can show you what I'm looking at. Now, if we're drawing from the most brutal Fibonacci, this is from the lows down in May all the way up to the top, you can see very, very nice price target down here at 72 cents. So that is definitely something that I've got my eyes on. Let's draw from the next Fibonacci over, making sure I haven't fat fingered this one. You can see the 1.236 down here, right on par with basically $1, $1.07. Round it up and call it $1, because this green box down here, this $1 range, is going to be a huge psychological level. As you can imagine, if we fall beneath $1 as well, if we come back over to our original chart, once again, you know, there's no data traded beneath this until we come down to much, much lower price targets. So I'll keep you informed on this, but at least in the immediate short term, looking at this chart, I'd say we'd be coming down to about the 72 cent regions, the 80 cent regions. If we do also head over to this this pattern over here, you can see this massive head and shoulders that we've been talking about for a while now. You can also spin this. If I show you what I'm talking about over here. Now, there's definitely an argument to be made that this was something like a bearish pennant right here. If I line this up, you can see this would be very, very beautiful. But as you can imagine, the price target of this would be really basically at zero. So I'm not going to focus too much on this. It's actually down at 25 cent, which interestingly is where the point of control is on the VPVR. So, you know, worst case scenario, you know, this recession lasts for years and years and years. The economy is in shambles, you know, wars break out, news, geopolitical news just keeps on getting worse and worse and worse. Around about that 20 cent, 25 cent is not impossible. It's not my price target for now, so don't throw rocks through my window. Bear in mind, when I mentioned $1 at $6.50, people threw rocks through my window. So if I start to pivot to slightly lower price targets, you know, look at my previous calls, look at how my videos have aged. But if we come over to here, you can see this head and shoulders pattern would be predicting a breakdown to about 84 cent. Now this was just above this previous range here, so 72, 84. So if we approximate between the ranges of about 85 cent down to 70 cent, this is really where I think we're coming down to. Now, in the higher time frames, let's talk about the money in the markets. Money has recently inflowed on this most recent bounce. Very, very pathetic. It seems like sellers are obviously in control of this. If we come over to the volume, it is obviously, as you can see, very, very flat, but in control. Well, the sellers are in control of this. So money flow index bounced up. It does also look like we could draw maybe a line of best fit on this. Doesn't fit perfectly once again. This is a line of best fit, not really a trend line. But nonetheless, no matter which way you're looking at this, you know, you've got highs up at the top of the range. You're coming down, you know, double topping, making lower highs at the heart line. So it looks pretty obvious to me that we're going to be heading back down to this 20-30 range. So really, I think $1 is right around the corner. I know I've said that a few times, but you know, the last time we talked about KDA, I think we were all the way up at 150. And let's see, I've definitely made a video on it in the past month. Let's see what's going on. 1 month ago, what was the price at? What was the price? 140, so I exaggerated a little bit, but I mean, as you can see, this move is happening. You know, every week now we're kind of coming down and pushing into new cycle lows for KDA. So $1, I think it's right around the corner. If you're looking at your EMA ribbons, there could be an opportunity to short if we do come up to the 130 and 140 again. I definitely will keep my eyes on that. Personally, right now I am already shorting. I'm in a Bitcoin short. Hopefully you're in that as well. If you are a part of the Discord, you will obviously have that call already. So if you're not in the trade, then you're probably not in the Discord. Make sure to come over and join the Discord. The link is in the description down below if you do want to join. But back over to the oscillators. Like I said, in terms of the money flow index, volume is topping out, money is topping out. There's probably no more money to run into this market, especially when you're looking at the weakness compared to everything else. And then even when we're, once again, focusing on how the Nasdaq's doing and these other stock market indices, they're starting to come down now, and they've just had a huge rally. So I think KDA has a lot of room to move to the downside. The stock RSI on the daily time frame is in agreement with this as well. As you can see, the blue line has very, very violently crossed below the orange line after we've once again come out into another top out region. So it looks like, once again, you can draw something like this. The first time we came up to this trend line all the way down. Second time we almost went all the way down, really only like 10% off from going into the oversold region. Third time all the way back down. Fourth time all the way back down. Didn't really come up on the fifth and sixth time, but as you can see, you know, the last time we went all the way down, I do think, considering we're all the way round about 66 to 75, so approximately 70 over on the stock RSI as a general reading, I think we're probably going to start nuking very, very soon. So my personal prediction is literally within the next 2 to 3 weeks, I think Kadena is going to be rocketing down to that $1 level. Now, that's really all I've got. I mean, like I've been saying, it doesn't need to be too complicated. There's not a million and one things to talk about when you are, once again, genuinely looking at the market structure. This reminds me of the first videos I made on Kadena. I always used to talk about this on Kadena. If you go back, you'll see a lot of my videos are titled, you know, the trend is your friend, things like this. If I can find it, I've made quite a few videos saying the trend is your friend. And, you know, right now that same thing is in play, but the markets are very boring. I mean, there's not too many opportunities to get into shorts on these. Now, like I said, if you do come up to the long-term moving average on the daily EMA ribbons, like, you know, we kind of made it over here, then it might be a good opportunity to short. But for right now, it really seems like KDA is a no trade zone for me. Once again, if we do push up to 135, 140, I will be putting in that next short, around about 10x leverage to the downside. But yeah, for now, that's really all I see for KDA. Lower lows, lower highs, absolutely nothing has changed in this market structure. And yeah, don't need to overcomplicate things. Nothing's changed in the general markets as well. I know a lot of altcoin videos, or people who watch my altcoin videos, don't like the news updates, but you know, once again, in terms of fiscal policy, financial policies, nothing's changed. ECB, European Central Bank, is raising their interest rates by 75 basis points to the highest level since 2008. We've got our next FOMC meeting literally 5 days away. The Fed is obviously going to be raising by 75 basis points. And then next month, I also imagine another 75 basis points. If we're coming over to the Bank of England, the next rate hike is on the 3rd of November, not too far away. And they're also talking about raising by a monumental 75 basis points, all the way up to 3%. So I think a lot of people, once again, I'm going to wrap up this video on this final thought. And this is exactly what I told everyone who watched my videos at 650. The trend is your friend for these altcoins. You do not have to religiously buy every single dip to be successful in these markets. Now, how do I know this? Well, I know this because I've made these mistakes. I've talked about this before very openly on the channel. I was here in the 2017-2018 cycle, and I listened to retail traders. They told me, you know, once the top was in, they were like, buy this dip, 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 buy this dip. And then by the time it actually comes down to the final capitulation, you know, you find that your DCAs are like, you know, 95% down. Your best DCAs from like a month ago are 50% down, and then, you know, the price comes up like 20%, and everyone's like, ha ha, you've missed out, you know, bears missed out, but show me your average buy-in price. You know, once again, if you're DCAing here and here and here and here and here and here and here, and then you DCA the exact bottom, and then we start pumping up into a new bull market, you're not going to be outperforming the people who just sat on the sidelines, waited for a trend to reverse. So for example, we've been looking at the Fibonacci's, we've been saying with things like the monthly time frame especially, as soon as the monthly starts to kick in bullish, that could be a great place to DCA. Now, if Kadena starts to push up, you know, $2, $2.30 is really bulk buying round about these cheap levels going to be better than, you know, listening to the people, I won't say any names, but all these YouTubers that have been telling you 8 pin at $20, 8 pin at $30, 8 pin at $10, 8 pin at $6, 8 pin at $5, and then when we come down to $2, they're like, ha, you know, told you so. So once again, be very cautious. The trend is your friend. Look at the weekly Fibonacci candles. Look at the daily Fibonacci candles. We're clearly in this slip and slide to the downside. We're beneath the EMA ribbons on the weekly time frame. We're beneath the EMA ribbons on the daily time frame. It really doesn't need to be more complicated than that. So I will not be, once again, I've said this a few other times as well. I'm going to wrap up the video on this. I'm not here pretending like I'm going to be able to call the exact bottom for KDA. What I will do is make sure that you've got better buy-in price targets, and your accumulation portfolio is looking much better than people who have been bullish for the past year saying DCA, 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 DCA. So as we come down to lower price targets, I will let you know, am I buying? At this moment in time, I've really got my eyeballs around about 85 cent all the way down to about 70 cent. I think that's going to be a great place to start accumulating KDA. Once again, nothing is written in stone. I want to see Bitcoin come down to these 16,000, 15,000, 14,000 levels. You know, if you're very, or if you're less conservative than myself, maybe waiting for Bitcoin to come down to 16,000, then reevaluating the market structure of Kadena, probably KDA will be around about 80 cent by then. That is a much better price target than right now. So that's it. That's all I've got for you today, my friends. As always, best of luck. I will see you soon. I will be letting you know when I'm buying. I haven't forgotten about KDA. This is definitely a project that I'm very interested in for the next cycle. You know, I'm going to make a video specifically about this, talking about, you know, how its inflation will affect the next cycle, because obviously, if you don't know, KDA does have some well, relatively sized issues in terms of inflation, at least in terms of, you know, you have to have a sizable amount of money coming into that market cap over time, otherwise inflation is going to deteriorate your bag. So I will be talking about my price targets, the market cap in which I foresee KDA at in the next cycle, and then, you know, taking into consideration the inflation in the markets, what price target should that bring us up to for Kadena in the next cycle? We've talked about this briefly before, but I do not think it's out of the question for Kadena to come down to something like a 60 cent, 70 cent, and then do a 50x, 100x. So be very patient, cowboys. We've been patient so far. That's all I've got for you today. Cowboy out. Peace.